Stochastic oscillator is a momentum indicator used to find out support and resistance. Stochastic is also used to know overbought and oversold levels of a stock or index. The stochastic oscillator is displayed as two lines, that is K line and D line. We'll see this in chart. This is a stochastic oscillator, and if you set the settings, then see this is the K line and D line. D line is a moving average of K line. The indicator oscillates between 0 and 100. This is 0 line and 100, so it oscillates between 0 and 100. But the important levels to look out is 20 level, this 20 level, and 80 levels, and above 75 this is the 80 level. So the important levels are 20 and 80. We'll set the settings and see the colors of this K line is 14 and D line is 3. This is a default setting. K line is of blue color and D line is of orange color. You can see here in settings. When K line crosses above D line, this blue line crosses above this orange line. Orange line is D line, as we have seen, and this blue line is the K line. When this blue line crosses above D line and they crosses this 20 line, crosses above this 20 line, then this is a buy signal. And also we can buy when oscillator falls below 20. It falls below 20 and then rises above 20. This is the signal of buying. When K line crosses below D line, look at here. When K line, this blue line, crosses below D line, this orange line, and they crosses down this 80 line. This is the 80 line, crosses down this 80 line, then a sell signal is generated. This is a signal of selling. Stochastic above 80, above this line, 80 line, this pink zone is considered as overbought. This is the overbought range, and stochastic below this 20 line is considered as oversold range. This is the oversold range and this is the overbought range. When stochastic forms a narrow bottom, it means the weakness of bears. This is the bottom. As we can see, this is the stock of Infosys, and in this chart, stock is moving in uptrend. This is the uptrend. Now see at stochastic, this is the bottom and these are the tops. So when stock makes narrow bottom and broad tops, then this is the weakness of bears and bulls are strong here. And in the downtrend, just see, this is the downtrend. Tops are very narrow but the bottom is broad. This is the bottom. So this is the weakness of bulls and bears are stronger. In this way, stochastic tells us about the bearish and bullish trend. Now we will see how to use stochastic for trading. Just see here. One thing that is very important to know, it is that it accurately measures the short-term shift in price momentum. This is a short-term chart. As you can see, this is a 1 hourly chart, and it measures accurately in this chart but fails completely in strong trending market. If we set the chart as 1 day market, it fails completely in that trend in longer time frame. But in shorter time frame, it accurately gives us the result. Stochastic and RSI are similar nature, so you can use one of the indicators. If you use both in combination, then this is not a fruitful thing. It is better to stick to one indicator, each of different nature, and avoid use of more indicator of similar nature that gives similar signals. Either use RSI or stochastic. Now just see how to use stochastic. See here, this is the oversold range, and this blue line is above this orange line, and this is moving above this 20 line. So we can buy here, and just see, this is the candle when we will buy. Now stochastic is moving in oversold range, and now see here, this blue line is below this orange line and they both are moving below 80 level. This is the 80 level. So we will sell here. This is the red candle where we will sell. So we buy here and we sell here. Again, this is the oversold range, and this blue line is now above the orange line. We will buy here. We will initiate our position here. and stochastic giving us a signal when the blue line is below this orange line and they are crossing below this 80 level. So we will sell at this candle, buy here and sell here. Again, stochastic is in oversold range and this blue line is above this orange line and they are crossing above this 20 line. We will buy here, but see, in this case this is the 50 line. So okay, one thing more I want to tell you, that above 50, if these moving averages, this K line and D line is above 50, then the stock is in bullish mode, and below 50 it is in bearish mode. So in this case, when this blue line is above this 80 line, this orange line, and they are crossing above 20, we will initiate our position, but from 50 level it is not going to overbought range and come back from 50 level. So we will sell here at 50 level. Again we will buy when this blue line is above orange line, but this time we will buy when this crosses the 50 line. This crosses above this 50 line, we will buy here. And see, this is a candle when we will again buy. In this way you can see stochastic gives us accurate results in not in trending market, but is when the market is in range. See, this is the position when market is in range. This is the price of a stock, that is 967, and the low, the support line is 922. So the stock is moving in this range 967 to 922. So in this portion, this is the ranging market, and stochastic gives us very accurate results. If we draw the resistance line and support line, this is the resistance line, and now we will draw a support line. This is the support line, you can see. So the stock is moving in this range, that is the upper limit and lower limit. Now see, we will buy here, and this is the first candle, we will buy here when touching the support line and sell here. This is the candle when we will sell. This is the candle touching this resistance line. Again, this is the oversold range and we get signal here. So we will buy here. This we will buy at this candle. You can see this is the candle. This is the last candle that is in the downtrend, and from this candle uptrend is starting. Just zoom it and see. We will buy with this candle and it is giving signal here of selling at this candle. See, this is the candle, this is the last one candle that is touching the resistance line. So we will sell here. Again, when stochastic is an oversold range and giving signal here, so we will buy here. You can see this is the last candle of downside. This way it is very good tool, or can say indicator, but remember you have to use one of the indicators of RSI and stochastic. If you use both, then the results are same and it will be not better for you. You will confuse.